Welcome, everyone. We're just getting started here. Give everybody a chance to log in. Okay. While we're waiting for people to log in, I'll just thank everyone again for their patience with my technology webinar skills. I definitely appreciate the effort that everyone went through to be here today. And actually, I don't want to waste too much of our precious time together with waiting on more people to join us, but I will just again welcome you all. My name is Arundel Gibson. I'm a client consultant at Sidel Private Bank, and this webinar today is Pathways for Funding Women Entrepreneurs. And I guess we'll start with a land acknowledgement, one that is especially resonates a lot for me, is from the 519. It's a City of Toronto agency committed to the health, happiness, and full participation of the 2S LGBTQ+ communities. Well, I know many of you are dialing in today from various locations on Turtle Island. I'm located in Takaronto, now known as Toronto, which in Mohawk means where there are trees standing in the water. Today, Takaronto is covered under Treaty Number 13 and the Williams Treaties. It is the traditional territories of many First Peoples, including the Mississaugas of the Credit, the Anishinaabe, the Chippewa, the Haudenosaunee, and the Wendat peoples. As we gather here today, these nations continue to experience ongoing colonization and displacement, where land acknowledgements are often offered in place of land itself. This territory is part of the Dish with One Spoon Wampum, a treaty made between the Anishinaabe, Mississaugas, and Haudenosaunee, where nations entered into an agreement to protect the land and responsibly care for its resources in harmony together. As settlers, newcomers, refugees, and Indigenous peoples, we have all been invited into this treaty in the spirit of peace, friendship, and respect. We are also mindful of broken treaties that persist across Turtle Island today and recognize our responsibilities as treaty people to engage in a meaningful, continuous process of truth and reconciliation with all our relations. So the chat function is enabled, and I'd encourage you to introduce yourself, where you're from, and ask any questions. I'll be monitoring the chat throughout and will relay your questions to the panel during the Q&A session at the end. This webinar is being recorded and will be available afterwards, both as a video format and also as a blog post. And now I'll hand it over to Ilse. Ilse Treurnicht, please.
Thanks very much, Arundel, to you and to Sidel for hosting us today, and all of you for joining us. And a huge big thank you to our three remarkable women who will participate in this conversation. They honestly have been at the coalface of this challenge of pathways to funding women for a very, very long time, and we're very lucky that they're bringing their extraordinary experience and commitment to our conversation today. So thank you, thank you. And rather than reading their bios, I thought we'd put them in the chat so you can learn a little bit more about them in your own pace. But I think we'll just start with sort of contextual introductions to how they got here and why they're doing what they're doing on this particular topic. And Sherry, I'm going to start with you. You're a multiple-time serial entrepreneur, and also a bit legendary as an ecosystem builder. But more recently, you're putting your energy on this Women Funding Women platform, and for full disclosure, I'm a proud advisory board member there. So tell us a little bit about what brought you to this, and why is this a priority for you?
Well, thank you, Ilse. It's great to be here with Shelley and Michelle too. So, in 2023, I decided to raise some money for my company, Profound Impact. Profound Impact was like my fifth startup. My previous companies had been in information security. I had sold my last company in 2017 to Robert Bosch, a German private company that was a specialist in automotive security, and that's what my latest company was. So now I'm with Profound Impact, and we're doing data analytics and AI. So it's a new industry for me, even though it's a technical industry. But I said, I knew I was going to have a challenge, but I decided that I wanted to go out and raise some funds. I had self-funded the company Profound Impact until that time. And so I just started going out and pitching to angels, and I was challenged. I was tremendously challenged, and I'm thinking, if I am challenged and finding it difficult pitching to mostly male investors, and I have a track record of 2 acquisitions, and 2 IPOs. So I decided at that time, I'm just going to move away from the male investors and focus on the female investors. And I ended up raising 3.25 million, with the majority being female and first-time angel investors. So I was very happy with that outcome. Deborah Rosati, the founder and CEO of the Women Get On Board, was also my chair and an investor. And she saw how I was struggling and said, Sherry, if you're struggling, everyone's struggling, all females are. So Deborah contacted Lara Zink, who at that time was head of women in capital markets. She's now with Delaney Capital. And the 3 of us came together and invited like-minded women to join us. And we founded Women Funding Women. And Women Funding Women is not a fund, it's a community, it's a national collective with the mission and the mandate to get more female angel investors investing in women-led companies.
That's great. And, over the last 2 years, how are you seeing that sort of shape out over across the country?
When we founded Women Funding Women on December 23rd, but we didn't launch until February 2024 with Osler's as our national founding partner. 2024, we hosted 7 events across the country, collaborating with ecosystem partners and engaging with established and aspiring female VCs and angel investors, and matching them with female founded companies, with the goal of increasing the number of female angel investors. This, for some reason, my notifications are on. I apologize for that. So in 2025, we strengthened the collective by adding 4 new initiatives. One was with Osler's. We started hosting curated intimate dinners, smaller events, so that we brought in both founders and funders to identify intentional action items. The second initiative was we partnered with Guardian Partners to produce a quarterly Founders Fireside Chat, which brings together potential investors to hear from a founder in a very informal chat. The third was the Spotlight in partnership with Scotiabank's Women's Initiatives. And we feature a founder in one of the spotlights, and then we alternate with a funder or funders. That's published in our Women Funding Women monthly newsletter. And the fourth thing we did was we partnered with Richard Rooney from Toronto to produce e-guides, we call them Angel Insights, for both founders and funders on topics that we thought would be interested in to both parties and groups of parties, an angel investment, term sheets, financing options such as equity, convertible debt, safes, etc.
That's great. So Shelley, you come a little bit down the same path, successful entrepreneur, and you've been putting your considerable energy and talent into building the 51 platform out of Calgary, but again with a bit of a national a national view. I'm sure there are easier things to do than this.
100%.
What brought you to it, and what do you how is this platform evolving? It's a set of funds, but it's more than a set of funds. Tell us about that.
Yeah, absolutely. And I just want to like echo Sherry's story. I've been an entrepreneur myself since either a co-founder or founder since 99. So I've been through the process of like raising money, as a team or as a solo founder. It's not something I would recommend. And it's a big part of why the 51 was created. Alice Reimer, Judy Fairburn, we're all co-founders of the 51, and we all had our own journey to kind of get to the 51 because of our lived experience. And then, happy to say that while I was an early stage energy investor in the 90s, my first tech investment was in 2002. And it was in a company called Solium, based here out of Calgary. It was a fintech platform. And we had a successful exit in 2019. And so, that really gave me the opportunity to go, okay, so been an entrepreneur, been an investor, sometimes successfully, sometimes not. Like, how do I want to contribute, my time going forward? And so, the band of Judy, Alice, and I kind of got the 51 going in March 2019. And it largely was the same thing as Sherry, where it was like we were trying to create an explicit network for women to become early stage investors, venture investors, but also creating a destination very much like what Michelle McBane has done at StandUp for women to find funding. Because I would say over the history of kind of like our experience as founders, we were always pitching to a room of men, or we were in the rooms as investors and we were looking at investment opportunities that were led by men, surrounded by men. And so again, it wasn't like, we weren't discouraged. We were like, this is a tremendous opportunity. Let's go after it. And so that's how the 51 got started. There was maybe a little bit of frustration there at the beginning, well, maybe throughout. But the 51 is kind of has taken an approach where, we always said we would be three things out of the gate. We said we will be one part capital, which is the funding. So initially we did SPVs. In fact, we partnered with Michelle on a deal and an SPV early on. Then we raised our first fund in the fall of 2020, and like it kind of goes on. So capital, the other part is community. So we said, you could write a check today. You could be a founder today. Great. We want to hear from you. You could write a check in 10 years. You could be a founder in 10 years. Great. We wanted to make the tent as big as possible. And so I'm happy to report that, we have, 45,000 growing community coast to coast of women just putting up their hand going, I don't know what I can do today, or maybe I can write a check today, or maybe I'm seeking funding today. Great. So we wanted the tent to be big. And we saw community as a means to do that. And then the third aspect was capacity. And we developed that component through a not-for-profit entity, because when we were out raising money, and Sherry will understand this too, when we were out raising money for SPVs or the funds, we noticed that women would take themselves through a specific process in order to write a check, where it would be like, can I write a check? What is my best check writing skills? Can I write a check? They took themselves through a process that was very diligent. And then we contrasted that with some of the guys that wrote checks into our funds, and they were like, yeah, sure, how much do you want? And they would just write a check. So that capacity building of like check writing and the capacity building of fundraising from a founder perspective, we couldn't have that in the business. So we put it into the not-for-profit. And so the capacity building doesn't live in kind of the 51 proper, because there's no financing to do that. We're a skinny organization. And so that's kind of like our journey, where we're at right now. We call ourselves a financial platform and a venture firm, and that financial platform is really the means of building the community. We want to bring other financial products to our community. In fact, we did a fundraise for the Northern Super League for their Calgary-based women's professional sporting team. We're talking to other teams. So we want, to be more broadly accessible from an alternative asset class. And, we really believe in the economic power of women through their ingenuity, what they're building, and through their checkbook, what they're investing in, and obviously like the spending and procurement power that we all have too, right? So again, investing in women is, we say we're investing in an asset class called women, overperforming, under invested in. So that's what we're doing.
And so, Shelley, you just very recently launched a bit of a refresh of the brand, and I could feel your fingerprints on it. It's lovely. What's the ambition, for the 51 now that you've got 5-6 years under your belt? What's the next chapter? What's the big view?
Yeah, there's still a lot of humility in our firm, I'll say. Like we're still kind of figuring out things as we go along. But, we have, when we first sketched out the 51, we said, let's activate 2.5 billion of women-led capital. That is our BHAG, except let's maybe drop the hairy part. It's our bag. That would be, we're measuring that through the capital that we're activating, but we're also measuring that through the community and the women that are in our community and the men that are in our community and what they are activating. So we're very data driven, and we're tracking as much data as possible. But we also see this as multi-decade, right? So, I would say the other thing that's really important to us is we want to build out a bench that's long-term of super talent that will help us, grow this longer term. We did launch the Food and Ag Tech Fund as a partnership. And so now there's a new firm that's spun out of the 51 called Naya Ventures. That's kind of something else that we're really proud of too, is like, can we be a platform for other fund managers and their thesis? And so I would say our ambition is bigger than our resources, but we're still pursuing it anyway.
Such a great story. And Michelle, I'm kind of nostalgic to say that you and I started in the VC business, 20 plus years ago. You stuck with it more closely than I have. Give us a little bit of a view of sort of how it's changed or not, and why you took the leap to really spin the, StandUp out of a more typical VC platform. And again, what did you see as the opportunity that you were going after?
Yes, well, thank you, Ilse, and it's great to be here today. And nice to see some really wonderful faces. Ilse, you kind of stole my opening line, and so what I wanted to share was my origin story into VC, and why it's so important to have people who look like you leading firms. And so Ilse was probably at the time, and her partner Carrie, who are both very dear friends and mentors of mine, the only two women in VC in Canada at the time, and I had the opportunity to be seconded to the fund that Ilse was managing at the time. And I think you had a lot of, traditional cookie cutter men coming through your door, and you were not going to accept them as, the person that was seconded. And then I showed up bright and shiny, not really knowing what VC was, but clearly there was something that, sparked in both of us. And I was very blessed to find the work that I loved doing because of Ilse, and because she took a chance on me. So I'm forever grateful. And those stories are the really important stories if we're going to continue building capacity and women supporting women. And Ilse is living proof of that for me. So StandUp was spun out of a very, probably the most successful seed fund in Canada, called Mars IAF, and the returns are spectacular. Unfortunately, we can't talk about them; they're not publicized. But let's just say they're off the charts. And so I had the chance to work there for a period of time. And because there were a number of women on the investment team, our networks were just different than the guys on the team. And so we had a higher proportion of women-led ventures, even, through 2010 to 2016 than most other funds. And our origin story was BDC came to us and said, we really like what you're doing. We love that you have a number of women on the investment team, and it's amazing to see how many women entrepreneurs you're getting behind. And so we want to sort of help seed and launch a fund with you and partner in that first fund. And so they committed $5 million to BDC, hugely important in obviously the start of StandUp. They said, go prove that there is deal flow, because I would get those questions all the time. Is there enough deal flow? I would get questions around, well, venture is meritocracy. And my answer to that is like, well, there's seed stage deals or pre-seed, like there's nothing to measure, right? And so it is all about pattern recognition and the founder and your buddy. And did you work at Facebook? And, are you a dropout from Harvard in a hoodie? And so the founders we invest in them obviously look quite a bit different than that, and I love investing in moms of 3 kids because I know how damn organized they are and how much they can get done in a day, right? But that's a bias my colleagues at the other fund wouldn't have. I also really wanted to have the opportunity to build a fund in a way that was true to my values. And I think that resonated very well with what we call our ICP, our ideal customer profile, which is the founders that we work with. And so there's a lot of trust in what we do. There's a lot of transparency. We try to take away the power dynamic that you often see when someone has money and the other person doesn't and is asking for money. And so those were, I wanted to infuse my values in a new platform. And again, to tell a bit of a story, when BDC was working with us, they're like, oh, let's call it F3, Female Founder Fund. I'm like, no. And so we named it StandUp after the little girl standing up to the bull on Wall Street. She dropped in 2017, which is the year we raised the initial fund. And for us, to me, she's our muse. She's confident. She's curious. She's energetic. She's everything you look for in a founder. And that was something really important for us. And so you'll see her on our website. She wants to make a difference. And so that was the start of StandUp. What I really wanted to do is have the opportunity to work with founders that may not be given the level playing ground, especially at the pre-seed and seed stage, and get them to the point where they become what we call consensus deals at Series A, because we take them through what we do, get their go-to-market going, get their financial acumen going, help them with their key hires, and get them to the milestones where everyone's like, oh, yeah, that makes sense. I get that deal. And that's kind of really what our platform does. And so we invest where there's at least one woman founder on the at C-level. So typically it is the CEO, but it doesn't have to be. But C-level founder with a significant amount of ownership equal to the other founders. And that for us is equally important too. If these companies are going to be successful, then the founders are going to be successful on the other side. And what that starts leading to was what was already happening in the ecosystem is that, wealthy guys would work at Shopify and then they go invest in their buddies, and that cycle keeps going. Well, we want to create that for women. And so that was something really important for us, to have like a really great established group of operators who would come back as angel investors. And I'm delighted to say that that's happening now in several opportunities where we're co-investing with some founders that we took early bets on.
Yeah, that's
And
great.
so, I could go on about StandUp. I think I'll pause there. But again, Ilse, you and Carrie have had an incredible impact, and without strong women in my life, I wouldn't be where I am.
So let's zoom out a little bit. We're at this fork in the road in Canada's economic story. We have a productivity emergency, according to the Bank of Canada. We have a very fractured relationship with the United States over the past year. And as you all know, our innovation economy is, including the funding landscape, is deeply entangled in that relationship. And it's elbows up. It's obviously an all hands on deck moment. And, women at half the population, highly educated, rising in, deep participation in the workforce, increasingly senior roles, starting and building businesses, fund managers, as we see here, they have a lot to contribute to this moment. And yet, across that whole spectrum, from starting businesses, commercializing our fantastic science, all the way to running new funds, we're underrepresented. So what gives? How do we unlock this potential for the sake of everybody? This is not just for women. This is essential for the future of Canada. Who would like to just jump into that big, hairy question?
I'll jump in here. What gives? I believe women need to be the change we want to see. And I have 3 key ways that I personally take steps to do this. First, you make the path visible. Now, we share our stories, wins and failures, and everything in between. When I share my journey as a mathematician, and then as an entrepreneur, and then as an angel investor, it helps other women see themselves in these roles, because visibility creates possibility. The second is open doors intentionally. Mentorship matters, but sponsorship is transformational. We need to say those women's names in decision-making rooms, recommend them for stretch roles, and back them for opportunities that they don't even see in themselves. And third, I think we need to build more inclusive systems. Beyond just supporting individuals, which we all do, we must try to reshape hiring, culture, funding process, and even technology, even like AI design, to reduce bias and broaden participation. When we as women lift up each other and redesign the system, I believe representation will grow and the entire innovation ecosystem gets stronger. Everyone wins when women have the chance to lead and innovate. Now, just answer the second part of your question. To unleash women's potential, we need to show them the money. We know the funding gap exists, not because of talent, but because of systemic barriers. And Michelle mentioned them. Pattern matching keeps investors backing what looks familiar. Women are asked more risk-focused questions. And also, many of them don't have access to the networks for capital, usually moves. So collaboration matters. And initiatives like Women Funding Women, Open Doors, expand networks, normalize women as both founders and funders. And I really believe this, that when women back women, we don't just narrow the funding gap, we define who gets to build, lead, and scale the companies that drive Canada's future.
Yeah. Shelley?
Oh, I loved everything that you just said, Sherry. And I can only echo so many of the things that you said, because I would say the same thing. One of the theses that we had at the 51 when we got started was, the 2%. And I hate bringing up the 2% because I just think, well, let's talk about the other percentage. But I think systemically in the venture ecosystem, it's not really going to change until we kind of go all the way back into the system. So you can't just have a firm go, okay, well, we're at this percentage now, let's improve our percentage of investing in women. It won't happen. You have to go back into the system and go, okay, well, where's the capital coming from? Like who's activating the capital, and like what is the face of that capital? Then you have to look at the face of capital from a deployment perspective. So what is the representation of that capital team? And I think, Michelle will correct me because she's closer to CVCA than I am, but I think it's something like 16% of partners in venture firms are women. I think that is the percentage. So again, if you think about, okay, well, who are the LPs, who makes up the capital allocation decisions, that's ultimately going to impact the actual investing on the outside. So I just think it's not going to change. It will not change until there are more LPs that look like us, and there's more capital deployment teams that look like us. And so that's why we took a very specific route, and happy to report that 91% of our capital on our Fund 1 and Fund 2 is women. And even when we look at the capital on the Food and Ag Tech Fund that we raised in partnership with Alison Sundstrom, we were very happy to see like the fun to fun check writers were women, and like the anchor from Farm Credit Canada, she was a woman that took a chance on us. She was the decision maker. And so that's been like really critical to the work that we're doing at the 51, is like purposely just making sure that women are part of the decision making all the way through. So that's like one way of unlocking, which really kind of just echoes what Sherry is saying. But then I think, the broader economic viewpoint is, and you said it, Ilse, women are graduating from a higher rate from post-secondary. The wage gap in this younger generation is closing. Women are buying homes themselves on their own. Women still control consumer spending, right? So we're massively influential there. If we look at procurement across Canada, where are women's roles in procurement, right? So we're saying by Canada, well, what is the face of procurement? So all of that adds up into kind of like the economic opportunity. And then the wealth transfer, right? I mean, we talk about that a lot. What's going to be in the hands of women and this next generation from a wealth perspective. And I just think that is another unlock for this nation. What I really like about the venture community is that we kind of band together, like as women investors, we band together. There's been different initiatives over the years to kind of bring us together. What I continue to kind of get frustrated with, and, being the Albertan here on the call, like there continues to be this fracture in Canada of like East versus West, or Alberta versus the rest of the country. And I really want to see like elbows down on that, because I just think that there's so much collaboration between the provinces that we could be doing to kind of like build out the economy. But yeah, I think it's a massive unlock for the economy, for women. And that's why at the 51, we say, we want to unlock the economic power of women. That's what we stand for. We have done the math around if we just went from 2% to 10%, what that unlock is, and it's massive. And I think collectively, like Sherry and Michelle, and the 51 and many others, we're all pursuing that. We want that figure to go up in venture. So.
But Shelley, if I can challenge you a little bit, we're also in a time of shifting national priorities, right? Obviously, Sherry, you're living at it's AI everything, particularly in the venture world, but it's also defense, it's also national security, it's it's new pipelines. What are the opportunities for women there, or how do those shifts kind of force us to think a little bit more strategically about how we go about this unlocking?
Yeah, I love that question. So maybe I'll say like we're out in market with our Fund 3 right now, and we did we did a ton of research on that, and we said what is important to our community across Canada? What's important to our community at the 51? And we kind of landed on 3 areas. And so you're talking about defense and other, I would say maybe more industrial. Obviously, AI is everywhere now, but we landed on 3 areas that we believe women will really have a tremendous opportunity in. One being health and well-being of themselves, their community, their family. What are these health solutions that are out there that are going to be designed by women that benefit everyone? We invest in health. We want to continue to do so. Financial services, fintech, wealth is another area, right? So again, largely financial institutions were never really designed with us in mind. So we want to see those solutions emerge around, women building, innovation and technology. And we've invested in a young woman, Simran, who's built out a platform called My Family Office, which really provides, family office management. That she came up with that. And so again, looking at that from a woman-led innovation perspective, and then the future of work, right? We know that women want to work differently. Women have different expectations around how solutions should perform inside of the enterprise. So the future of work is massively interesting to us as well. So that's kind of the thesis that we are pursuing at the 51, is the future of health, the future of wealth, and the future of work. So that's kind of what we're doubling down on.
That's great. Michelle, you want to jump into this big pond?
Yeah, so I'd like to talk more specifically about a trend we're seeing at the early stage, and it is really easy and simple to build down, right? You know, when we started Ilse, you needed $10 million to get an MVP out the door, and now companies can, with two people, they don't even need capital, can test their idea, test for customers, figure out if they have something. And the other piece that we're just reading more and more about is the draw to San Francisco right now, particularly for young founders. So everything's happening there. There's such density. It's completely alive. And the trend that we're seeing, again, particularly with young founders, is they're very mobile. They're just up and moving there. There's a really good podcast on BetaKit that Doug talks to this young founder about. You wanted to stay in Canada, but now you're in SF and you're building there. And it was very simple. He got funding from an SF company for his early stage idea. And so that's true for so many folks. And it really doubles down on the importance of writing those early checks as Canadian funds and as Canadian investors. Because if people have a community here and have reasons to build here and feel that they have a supportive ecosystem, they will stay and they will build here. Actually, my ideal is when companies go back and forth, so they build here, but do you spend time there? Because there's just so much going on there that no one can replicate. Like everyone globally should be spending some time there if they're building in this area. But without that early check and that early funding, these companies are gone. And we're seeing that in droves. What we are seeing, however, is that the young women don't identify, again, with this group in many cases. The tech bro thing is back. And they're looking for communities that they want to be a part of. And so you'll see we're sponsor something called Build and Chill, where these incredible young women, like they're insane. They put us all to shame for what we did in our 20s, are just coming together, finding their own community, building and coming together for 2 days on Muskoka. And so those are the trends we're seeing. And so if as Canadians, we don't get those checks in early, we have to stop making it hard for them with some of these government programs. The horror stories I hear about IRAP and this and that, it's just got to stop, right? Understand it's government money and there's got to be a process, but we have to be more nimble and do stuff that makes sense and look for signal from someone else if there's going to be something. We're going to lose a whole generation of companies if we don't do something soon.
But an interesting,
I love that. Sorry,
yeah, sort of interesting. Yeah, two-prong opportunity, right? It's easier and cheaper to test. So if funding is a constraint, women can, test their ideas
Absolutely.
earlier. But we may
Absolutely.
see this sort of opportunity to, if we can figure out the unlocking of capital, because there is data now that, the flip is also true, right? Is women in the US are looking in increasing numbers to actually leave the US and move to Canada. So
Exactly.
So there's maybe an opportunity in this mess somewhere that a unique approach could really unlock.
Yeah, I'll double top on that. We do invest in the US as well. We'll do a smaller amount in the US. The founders we interact with there look at our website and they're like, oh, we feel that it's different. Like just especially in this moment in the US, they absolutely are looking for something unique and different and partners that work with them in the way where they want to be met.
Yeah. So let's just, Michelle, you mentioned this a little bit, is that the pipeline, whenever you talk about women, there's always this goddamn pipeline question that comes up. Is the pipeline good enough? Is the pipeline there? Tell us, just give us a little bit of color of, what are you seeing, sectors, stage, what's that picture look like compared to what it was in 2021 when money was more abundant?
Yeah. No, it's a great question. And, I've been around long enough to know I don't get panicked if we don't do a deal for 2 quarters, because I know we will find pipeline. It's just the nature of an early stage pipeline. But we had our LPAC yesterday, and it was such a pleasure to take them through the 5 new deals we're doing that are all very different. We have never had a stronger pipeline with, and I don't like using the word quality. And what I mean about that is more the um, maturity of the founders that we are working with. And so many of them worked at either a well-funded Series A, B, C startup and learned through that, right? Or they may have been at a Google, a Facebook, a Stripe. Or they're through these builder communities that are just their own little thing that's going on. And these folks are top drawer. I can't say enough and how excited I am about the current pipeline. And so we get challenged with that all the time. And my answer is always, it's not about quantity. It's about, are these companies that fit a venture-backed model? Because we are a very specific thing, right? We're looking for a very specific type of opportunity that can return multiples on the fund. That's how we do it, right? It might be different for some angel groups, or everyone has their thesis. For us, we're looking for a specific profile. I've never seen a group that's been so strong in this particular cohort since August, actually.
Shelley?
I mean, I echo that too. And I kind of smiled when Michelle talked about it earlier. One of the things that people would say, well, is there any deal flow at the beginning? And we're like, yes, there's deal flow. Like, hello, we are entrepreneurs, we build companies. Like, there are other women building companies. And I would just echo what Michelle is saying. Like, we are seeing some really excellent opportunities to invest in. And I'm sure there's going to be collisions with StandUp in that area. There always is. So I mean, like, we are really excited about what companies women are building. There was another point I just wanted to kind of touch on, Ilse, and it was about what we were talking about, Michelle, and government funding. I think that if there was one kind of plea I would make from an economic standpoint, it would be that we have to ensure that the government capital doesn't become the capital in our ecosystem.
Mm-hmm.
I don't want to see, government picking winners. That's like, and it's kind of like philosophically, I'm just like, no, the opportunities should be good enough and the environment should be good enough where the private capital is being unlocked, because it's a tremendous opportunity. And so I would say that that's still the one thing that I think is missing from a economic unlock federally in Canada, probably even provincially in some areas, where it's like there's really no incentive for that private capital to be unlocked because government is always filling the gap. And so I would like to see a better kind of mix of public and private capital going into this asset class and going into any project that's a priority for Canada.
Mm-hmm. So I think that's really important. So let's talk a little bit about this juxtaposition of headwinds. I mean, the elephant in the room is a little bit the DEI backlash, which is very prominent in the US, but let's not kid ourselves. It's present in Canada too. And then Shelley, you mentioned, at the same time, we have this extraordinary shift in the financial agency of women, right? Not just through their own workforce participation and senior roles, but building businesses, but then the wealth transfer, which is particularly impacting younger women and is unfolding in real time as we speak. And I know the 51, you've really focused on, getting women as investors, and Sherry, you're doing the same thing. Talk a little bit about that sort of tension, but also, what are these women looking for, and how do we make it easier for them to participate either in funds or in angel groups?
I'll step in here. You know, what I've seen, and Shelley and Michelle have more experience than I do, but historically women tend to take more time with their investment decisions. But once they commit, they're persistent, thoughtful, and stay in for the long haul. So that's a strength. What organizations like Women Funding Women, what we must do is understand what truly motivates women to step into angel investing. We need to use language, education, nudges that resonate, you know, anything to support the confidence, clarify risk, and showcase the upside. And I believe we need to create a real sense of FOMO around the wealth creation opportunities that the men have been involved with in the past, and that comes from backing women-led companies. So I think that, you know, we have a huge opportunity here, of course, and also a challenge. But I think we need to, and I'm saying this, preaching to the choir here. We need to continuously refine our language to say, how do we create this asset class awareness that women should take advantage of,
and make it easier for them to be in the deal flow, right?
Yeah.
And I mean, Shelley, you and Michelle, you can also maybe talk about, you know, I think there's a perception that participating in funds is, you know, you have to write a really huge fat check, and that's really changed, right? So, Shelley, how have you gotten women to, you know, to see your fund as one pathway?
I think, you know, in one part, it often starts with the invitation. Like we hear it so often, people are like, oh, I've never been invited to invest before. And, you know, in some cases they're going, I've never been invited to invest before, but I'm always invited to give my money away. This is a unique opportunity. Well, okay, so I can like be investing for return. So I think that that's part of it is making the invitation available. I think number two is like, let's just take away some of this language that seems really opaque and like exclusive. Let's just talk about it in real terms and real opportunity. You know, at the 51, we did do, and we continue to do a democratization of this asset class. I hate that word, but we've just made it really easy and accessible. And so in our Fund 1 and Fund 2, you could join for $5,100 a year for 3 years in a row. It was like a subscription. I would pay it every year for 3 years. I would pay a membership. That membership enabled me to co-invest on any deal in the fund. So I could have like a portfolio, but I could also double down on companies that I really had affinity for. But I think, you know, Sherry, you touched on this earlier too. I think women have kind of a mission at heart that they want to achieve with their capital, right? And so there's many of us now doing this work. And so I think now women are going, well, this is the impact I want to have. This is what is meaningful to me. And so I think that in some part that really drives the unlock for women as they go, I want return and impact. I want to build capacity and I want return. I believe in women and there's a capacity gap. You know, I want to make money. And so I think all of those conversations have to be available now, right? And like every woman can kind of pick and design their own investing journey. And so, you know, us at the 51, we have like a mechanism to do that. And we'll continue to make it really easy for women and anyone to write a venture check.
Mm-hmm. Michelle, you've had a bit of a unique experience in terms of bringing institutional investors in right from the beginning. And we know institutional investors, particularly right now, they don't want to back emerging managers. And it's so funny how women, you know, you've been in this business 25 years, you're still emerging. Like, what the hell?
It makes me feel youthful. How's that? So yeah, I mean, we are definitely in the emerging manager bucket. We just had our close on Fund 3, and for those who may not fully understand the fund lingo, a fund is considered an emerging manager until they hit Fund 4. And so so there's specific buckets, particularly in the US for emerging managers, much less so in Canada. And so, you know, it took me 2 years after that BDC check to raise the balance of the capital. And it was a good thing because Fund 2 ended up being a little bit simpler. I raised it at my dining room table during COVID, but Fund 3 is the Show Me Fund, and that's been, you know, a bit more of a time to kind of get that one across the line. But having a strong institutional base was super helpful. But I would get questions from LPs when I was raising, and we're enterprise software investors. We don't do consumer. They're like, oh, you're going to invest in women, so that means you're going to invest in companies like Glossier and Away. And I'm like, no, I don't know how to invest in those companies. Like, they're great companies. They're not what I do. But that was the bias, right? That's what women build. And so I hope through our fund, we've managed to show that these founders are building very different type companies. For all our LPs, what they do, why they invest in an early stage fund, is to get typically access for their later stage investments. They're looking for co-investments. And what's been particularly exciting for them is that we're bringing them deal flow that they're not getting from their other fund managers. So they're starting to see that, right? They're starting to see that pattern that there's other stuff, there's other, you know, reasons that we would do this deal because company X is not in, you know, fund manager Y's, and they all invest together. Let's be real, it's all pretty clubby. So we're bringing them different deal flow that's really important to them. The conversations changed. I think the what I would say about DI, there was, you know, like anything, there was some call it greenwashing that happened through that period that, you know, makes it easy to have a DEI backlash. But if a company, and Target's a great example about that. I was just reading about that, how they've been yin-yang. And it's like, what are your values? And if this aligns to your values, then just do it, right? And so change the word DEI if you don't like it. But it's important to continue to build capacity in groups that are diverse, and you're going to succeed as a company that way. I always tell the story. It's a really simple one. It doesn't offend anyone. When the Google developers were developing the YouTube app, all the developers were right-handed. And so the videos, if you were left-handed, ended up being upside down, right? So a very simple thing, right? If you had someone who was left-handed on your team, you would have developed it properly for your client. And that's what, you know, our companies are really trying to do as well, is develop products that delight their clients.
And I think what we heard today from all of you is just the, you know, the economic opportunity is so profound that the DEI story is almost secondary, just in terms of the current climate. But for value's sake, you know, you just get better results if you also pay attention to having different perspectives on your team. So I know we're almost out of time, and we could talk for a very, very long time. So I do want us to just look forward a little bit, given this sort of moment, given you know, the 51. Michelle, you're on Fund 3. Sherry, you're continuing to build out this community of women who are very motivated to support other women. That's the one thing I really pick up from the Women Funding Women. There is such an appetite, if we can just kind of unlock these channels and make it easier for people to do what they already want to do. But give me a little bit of a, you know, 5-10 years. What are you hoping you'll see? And maybe Michelle, we'll start with you.
Yeah, for me, it's this flywheel piece. So you see it in you know, the other areas. You see it, as I say, give the example of, you know, the Shopify founders and other folks around them finding wealth, coming back, reinvesting, starting new companies, and that flywheel is working pretty well. We're just seeing the start of it for women and their businesses and women funding women, and so it's going to take a long time. I think that's the key message. You know, this does not happen overnight. And if we yin yang and go backwards, we're like, oh, we're not doing this anymore. We're not going to invest in this anymore. We're going to keep doing this work. We're going to go backwards again. And so I think having these conversations is hugely important. Just, you know, we're all three of us are happy at any time to talk about all of this. But for me, it's that sustainability almost, whatever that looks like. That to me is what I'd like to see in the next 10 years. And one of our founders ringing the bell.
Sherry?
Well, you're talking about 5, 10 years, possible for women founders. I believe that we as women need to step up and support women. I think this is the main message here today. We need to be part of the wealth creation equation. If we're not, then women businesses in Canada will not succeed. And I'm going to repeat what I said earlier. When women back women, we don't just narrow the funding gap, we define who gets to build, lead, and scale the companies that will drive Canada's futures. And as far as us women going, as far as investing, the question is whether we are women who will step up to the challenge and take the risk. Something that I heard early on when I started angel investing, then the second round would come and the third round would come, and they say, oh, you have to the men would say to me, you need to stay in, you need to pay to play. And I'm thinking, what? I've already put my money in. So part of it is we need to stay in longer term, which women do, as I mentioned earlier, but we've also need to plan it out like, okay, I'm going to go in the first round and I'm going to stay in the second round and third round because I want to really see this company succeed and scale.
Mm-hmm. Shelley?
It's a great question. I think in some ways I'm kind of like, wouldn't it be cool if the 51 didn't exist? And then I'm like, hell no, it's going to exist and it's going to be freaking fantastic. Because for the very reason that Michelle just talked about, all of us are creating this flywheel, right? So we're activating women's capital as investors. We're investing in the ingenuity of women. There's this wealth opportunity that's being created on the cap table. And then we know what early stage entrepreneurs and early stage investors do is they turn around and they keep doing it over and over again. I've been part of those flywheels. I've invested generously back into the community that supported me through my endeavors. And so we're going to continue to do that. But I think this whole, women are invited to give their money away, but they're not invited to invest. That needs to go away. I think this whole construct of women are risk averse, that needs to go away. And I think in 10 years, I hope that the work that we're doing is just commonplace. It's just we don't even have to call it anything anymore because we're just, part of, we're 51% of the economy and we're stepping up and we are a machine for the economy. So in some ways, I just hope it kind of goes into the backdrop. Yet, the women that participated and like Sherry said, took that risk have been enormously successful. And that success just begets more success. So that would be what I would say.
Yeah, and I would definitely also say that, for this moment in Canada, we simply can't afford to have women and their capital on the sidelines, right? That is the one piece of this puzzle that we must solve. So I can't thank all three of you enough for this wonderful conversation, and let me hand it back to Arundel. Thank you.
Thank you, Ilse, and thank you, Shelley, Sherry, and Michelle. What a conversation this has been. It's so many great takeaways. Sherry, I loved your comment about we need to create a sense of FOMO around women investing. And then Shelley, I think you said we need to invite people to participate. I like that idea, creating a space where people feel invited to the conversation. Michelle, when you mentioned, apologies, I'm just going through my notes here. Well, first of all, I love the whole stand-up, the woman, the little girl, that was great. But the need to continue this momentum, this idea that we can't let the terminology hold us back but so really appreciate all of your comments today. And for the participants on the call, I'm sorry we didn't get to all the Q&A, but I will follow up with you individually. I'll also be sending this as a video and blog post afterwards. And your input is really important. I posted a link to a survey. Please fill that out. It will help us to inform future programming going forward. Thank you again, ladies, for making the time in your calendar today. Absolutely inspirational and so grateful for your time. Have a wonderful holiday season.
Thank you.
Bye.